Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Analyst at GDMFX with today's outlook. Today all eyes are on the Federal Reserve. Now starting with the dollar, gains most of its major peers before the Federal Reserve releases minutes of its last meeting as investors wait the timing of the first interest rate increase since 2006. The yen, on the other hand, was near a one-month high versus the euro after the International Monetary Fund cuts its global growth forecast, boosting demand for haven assets. Now, Australia's dollar fell after the Statistics Bureau dropped its seasonal adjustment of jobs data for the past 3 months. Now, in a little more details, Australia's Statistics Bureau said today seasonally adjusted jobs estimates will be revised so they're at the same as the original series for July, August and for September data due tomorrow. Now, the same bureau is under scrutiny after unemployment jumped from 6.1% to 12-year high of 6.4% in July, then retraced the gain in August when a record 121,000 jobs were added under the seasonally adjusted measures. Now the Aussie dropped 0.6% to 86.63 US cents. The Kiwi, on the other hand, on Australia, in New Zealand, the dollar there declined 0.5% to 77.92 US cents after private report showed growth in services industries slowed in China, which is the biggest trading partner. Now, the purchasing managers index and the market economics declined to 53.5 in September from 54.1 in August. Options markets signal a further rally in the yen from a 6-year low in Japanese officials raised concerns about potential damage from a weaker currency. The premium from 1-month low options to buy the yen against the dollar versus those to sell rose to 70 basis points today. The most, of course, since May 19. Now, the yen completed its yesterday's biggest two-day gain since February after Bank of Japan Governor Kudura said the central bank will closely monitor the exchange rate, and Prime Minister Shinzo Abe said its weakness is hurting small companies and households. Let's take a look at the commodity sector to see over there that gold fell to the lowest since this year in October 6. As the Federal Reserve prepared to end monthly bond buying purchases that will fuel gains in asset prices while falling to stoke inflation. Now, investors believe that gold will extend losses into 2015 as the dollar's strength hurts bullion. Average prices, they say, will decline each quarter, reaching $1,165 an ounce. The price right now is $12.16. West Texas Intermediate extended declines from the lowest price in more than 17 months before reports today that might show crude stocks rose in the US. Now the price declined with $2.3 yesterday and is expected to decline further. That's all for today. As I mentioned, FOMC minutes at 6 p.m. GMT. Bye-bye.